If you're a retiree aged 65 or older, you could be missing out on a massive tax break that might put thousands of extra dollars back in your pocket starting with your next federal return, and most people still haven't heard about it yet. This temporary perk, introduced through the One Big Beautiful Bill Act, is a game changer for seniors on fixed incomes, so stick around as I explain everything you need to know to claim it properly. If this sounds like it could help you or someone you care about, hit that subscribe button right now and turn on notifications so you never miss out on these kinds of money-saving retirement tips. And drop a comment below letting me know if you're planning to claim this deduction. Let's dive right in. Beginning with your 2025 tax return, which you'll file in 2026, qualifying seniors can now take an additional deduction of up to $6,000 if filing single or $12,000 if married filing jointly, and this stacks right on top of the regular standard deduction, plus the extra amount seniors already get for being 65 or older. That means a single filer could potentially shield around $23,750 from taxes, while a married couple where both are eligible might protect close to $46,700 or more, depending on the exact figures for that year. The best part is, it's completely above and beyond what you were already entitled to, offering real relief without forcing you to itemize or jump through extra hoops. This benefit only lasts through the 2028 tax year, so you've got a limited 4-year window to maximize it before it potentially disappears unless lawmakers decide to extend it. To qualify, you simply need to be at least 65 by the end of the tax year, and your modified adjusted gross income has to stay below certain levels for the full amount. It starts phasing out for singles above $75,000 and is fully gone at $175,000, while for joint filers, the phase-out begins over $150,000 and ends at $250,000. The reduction happens gradually, typically $60 less for every $1,000 over the starting threshold, which keeps the biggest advantages focused on those with low to moderate retirement incomes. Let's look at what this could actually mean in savings. For a single senior, combining the base standard deduction, the existing age adjustment, and this new bonus could wipe out taxes on a good chunk of Social Security benefits, pension payments, or modest IRA withdrawals, potentially meaning little to no federal income tax owed if your total income fits well within those shielded amounts. A married couple in a similar spot might see even more protection. And if you're in the 22% bracket, that full $6,000 deduction alone could translate to about $1,320 in reduced taxes. Money that could cover medications, home repairs, or just make life a bit more comfortable. Keep in mind, this doesn't completely erase taxes on Social Security the way some headlines might suggest. It lowers your overall taxable income, which can indirectly reduce how much of those benefits get taxed under the existing rules, often leading to significant relief for many retirees. One huge advantage is flexibility. You can claim this whether you take the standard deduction or itemize, and it works even if you're still earning some part-time income as long as you stay under the income limits. Claiming it is straightforward too. When you file your 2025 taxes using Form 1040 or the senior-friendly 1040-SR, you'll find the calculation on a new schedule where it guides you through your modified AGI and applies the phase-out if needed before transferring the amount over. Tax software for 2025 should handle most of this automatically if you input your details correctly. But if you're using a professional preparer, double-check that they're up to speed on this change to ensure you get every dollar possible. To get ready, start collecting your income documents, Social Security statements, and retirement account info early. Tax season kicks off in late January 2026, and filing sooner rather than waiting until April can avoid stress. If you're DIYing it, practice with the forms ahead of time. For those with more complex situations, like deciding on IRA distributions or when to start certain benefits, this deduction is worth factoring into your strategy during these 4 years, perhaps pulling income forward while the break is available or deferring some until later. These choices are personal, so talking to a trusted financial advisor or tax expert can help tailor it to your needs. A quick word of caution. This is all standard IRS information available for free. You don't need to pay anyone for special access or secret tricks to claim it. Watch out for scams promising insider knowledge and rely on legitimate tools or professionals instead. Right now, check your age and projected 2025 income against those thresholds to see if you qualify. Gather your paperwork, plan your filing approach, and mark your calendar to claim this every year through 2028. Spread the word to friends or family who might benefit too. With rising costs everywhere, this kind of relief can make a real difference for folks who've earned it after years of hard work. If you found this breakdown useful, give it a like, subscribe for more retiree-focused financial advice, and comment with your thoughts or questions. Let's keep more of that hard-earned money where it belongs, in your pocket. Thanks for watching.